One of the most common chatter that we are hearing on the street is whether or not the rally in PSU stocks will continue. Well, despite a massive run-up in PSU stocks, some brokerages still believe that there could still be room left for gains. Now let's break this down for you. Most PSU stock valuations still trade lower than the peak PSU stocks enjoyed in the period of 2006 to 2012. The PSU Index itself has outperformed the Nifty by 70% in the last 12 months, and it's outperformed the Nifty in 2023 by 40% and 15% in the last 6 weeks. What you want to also remember is some of these counters are still trading way below their peak valuations that was seen in the period of 2006 to 2012. So Jefferies believes that stocks like ONGC, BHEL, Coal India, HPCL still have room to go on the upside from anywhere in the range of 70% to 120% to match those peak valuations that were seen over a decade ago. And while the markets seem to be questioning whether or not this rally is here to stay, let's not forget that PSU stocks have underperformed for over a decade. They've only just began performing in the recent 2 years. So that also explains why there could be some more room to go when you look at some of these PSU stocks. The PSU Index itself trades at 12.1 times, which is not very expensive, especially if compared to the Nifty 50, which trades at a 40% premium to the PSU Index itself. So if these two have to normalize, the PSU Index could potentially rally another 15 to 20% from these levels. PSU banks have also rallied. They're up 78% in 1 year, while private sector banks are up 70%. But we do expect that that gap could actually widen as we go ahead, as a whole lot of PSU banks are looking to get re-rated. There's been operational efficiency and healthy growth coming in as well. With regard to the oil and gas PSU names, they've also been on a tear since October 2022. Now the reasons are simple. Crude prices have remained at $80 to $82 a barrel despite geopolitical stress. You've also seen no fuel price cuts and no indication of that in the budget either. That has led to very healthy marketing margins for a whole lot of the oil and gas companies. There is some risk there, of course, if we do see a fuel price cut ahead of elections or if crude prices rally up to $90 a barrel. But up until $85 a barrel, they seem to be comfortable, which also means stocks in the oil and gas pack from the PSU space could actually gain another 20 to 30% from these levels. What you also want to keep in mind, which is quite exciting if you're a long-term stable investor, our PSU stocks are dividend-paying stocks. So stocks like GAIL, IOC, Coal India, BPCL, ONGC, Oil India, NALCO, RITES, Power Grid have all announced a dividend anywhere in the range of 3 to 5% each. And also most brokerages believe that PSU counters will continue to pay out dividends. So if you're not going in for the 1-year returns of 20 to 30% on back of valuations of PSU counters, and you're looking for more stable dividend paying companies, PSU still fit the bill.